Hey, Carin.
Hey, Shawn.
How are you?
Pretty good.
Ladies and gentlemen, Carin Elliott. Yeah, we'll have a good time today. Thanks for joining. I intentionally didn't get a an outside guest today. I waited all the way up until the very last minute, didn't I?
Yep,
Yes.
that would be accurate.
Yeah. And I'm like, you know what? I'm gonna go live today and talk about three things around mortgages like that could kind of hold you up or be potential pitfalls. And then I ask you a couple questions like, what do you run into? And you're like, you told me the three things. And I'm like, by the way, at 2 o'clock, you think you want to join me? So,
Yeah, you got me.
all right, well, you're here. And so, Carin, as you know, Lending with Purpose, we have conversations with clients and friends, intro to various forms of information, professionals, and resources that we use, we look for that we never knew existed or wanted to learn more about. So that's why we are here today. And intros to clients and friends, you are both of those, but now we work together at Fortis Mortgage. And so I remember last year in the midst of the pandemic and the height of it, I saw shout out to LinkedIn, shout out to having friends and relationships too as well. But I saw you had made a post on LinkedIn, and I hadn't really ever seen you on LinkedIn doing too much. And so I'm always here in this space. And it was a comment to some extent like, hey, listen, I'm not on this platform often, but I'm transitioning, and any help you could provide would be greatly appreciated. Something to that effect. And so I read it and I said, oh, wow. All right, cool. It's an opportunity to help someone because I love that. That's just my thing. I want to connect people and help as much as possible. And I reached out to Carin and I'm like, how can I help you? Like, what's going on? Just let's just let me know how I can help you. So we started talking more and more. And I'm like, well, you know what, Carin, for selfish reasons, I'd love to have you on the team. I just don't think I can afford you. And she's like, all right, well, give it a shot. Let's see what's going on. So long story short, um, you are here with Fortis Mortgage. And like I said, you can't never underestimate the power of relationships. Also, again, shout out to LinkedIn, this particular platform. And Carin, you were a client too as well. I think if I recall, we were telling your daughter this on Friday, but didn't I think we helped you buy your first house like early in my career, like back in, was that your first house? No, that wasn't your first house.
It was it was my,
It was
let's
your
see.
first like family house.
Yeah, yeah. It was our first, well, no, it was our second because we had the condo in DC before that. So, but it was our first, like, one we thought was going to be our forever home. Let's say that.
All right. All right. And I remember um, you know, dealing with you at that point, and we got really creative. And it was awesome situation. And then since then, we've helped you with other purchases and refinances, and here we are. And so for everybody that's listening in, again, this is Carin Elliott. Carin, as I tell everybody, I'm not going to do a great job introducing you. I could probably introduce you because I know you well, but I'm not going to do that well. I don't have that whole Steve Harvey introduction down yet. So you have to tell us who you are and what you do.
All right. So I'm Carin Elliott. I am the client services manager with Fortis Mortgage, and I assist with taking our borrowers from once their documents are collected, I review them and I bring each borrower through the loan process up through closing.
Got it. From application to close, we call you. So if anybody's a sports fan and track and field, Carin is the fourth leg of the relay, the strongest part. That's the one that brings us home and takes us through the finish line. So that's what she does for us. But also, Carin, you're a wife. You have three amazing kids,
That's true.
right?
Yes, who are home with me every day.
Yeah.
So I actually homeschool them. So one of the upfront things that Shawn and I talked about was that I needed full flexibility, where I would be able to be at home so that I could homeschool as well as care for my then 2 year old. She's 3 now, because, it was in the middle of a pandemic. Where am I going to send her? Um, as well as work full time. And we are doing that successfully, uh, thanks to Shawn and Fortis and the flexibility that, having this position allows. So it's been probably one of the best moves I've ever made, was joining Fortis.
Thanks for that. The feeling's mutual. The feeling's mutual. So it it's really cool to see what you're doing. It's really tough. Our clients actually appreciate that too as well. The good news, ladies and gentlemen, is we keep getting 5-star reviews. So I tease Carin, tell her she can't ever get anything less than a 5-star review.
Yeah, you do.
Um, and it's going pretty well. And Carin's background, your education background, right?
That's right. I have a master's in curriculum and instruction and 3 different focuses. In Virginia, I'm able to teach English as a second language, early childhood special ed, and early childhood. So it's pretty, it has served me well. But I've also been a prior business owner with my husband, myself. We've owned an insurance agency, and I used to own a education consulting company. And I did a lot of free programs in the community just for like summers because a lot of kids would sit and do nothing. So I brought in a lot of authors for kids to meet, and we did a lot of. I used to call it Wormy Wednesdays, and then we had Magical Mondays where we did just early learning activities so that kids had a chance to get out and be social with other children. So I always called it school readiness and kind of inspiring the love of learning. So kind of done a couple things there.
You have, and you're bringing that uh, everything that we're doing here to the mortgage industry too as well. Like, you talk about school readiness, talking about mortgage readiness too as well. So one thing that really struck me when I was helping Carin and her husband through these mortgage transactions is I really only ever had to tell her once, like what documents to provide. Like she's like pretty much like, just give me a checklist. I'm gonna knock it out. I'll get you everything you need. So I'm like, uh, okay. And so we send the checklist to her. She gets us everything we need. And then, oh, by the way, you might need this information too as well because I made a transfer into this particular bank account or this and that. So Carin was able to kind of foreshadow and foresee any potential pitfalls that would occur as well. And so, you know, over this past year, we talk about people pivoting and, making different decisions on how they operate in their businesses and life. And so I thoroughly believe for everybody that's listening that are entrepreneurs and, business owners and, my mortgage folks that are hiring folks, people like that, those companies, those of us that have the best people in the right seats are going to win, right? The best people in the right seats. And so it's great if you do have the mortgage experience or experience that translates into the industry that you're in. But as you're going to be able to see from our conversation today, that's not always the most important thing. And so it's really about having the most talented people on your team. And so I really, really enjoy working with Carin because, let's just face it, for us, we're a small business and we're a big deal though. But we are a small business in regards to, excuse me, the number of bodies, but our reputation's on the line every single loan that we do, every single loan. And so it's just what we talk about is how do we humanize this mortgage experience because the goal is to try to make it as efficient as possible and keep it electronic and things of that nature. But at the end of the day, we need people to be able to humanize that experience and have people feel great about it because let's face it, like it's daunting. It's really daunting. So, Carin, throughout the process, when you were buying houses, did you ever feel like it was daunting?
Just felt like it was a lot of paperwork, a lot of legwork. I remember, and this is one of the things that I tell our clients is that, I'm never going to ask for anything that I don't need. So, if I'm asking you for it, I really do need it. And up front, I try to say, one of the things that I felt like wasn't said to me is like, I'm going to ask you for this, but they haven't really looked at it. So they might ask you for more. So just knowing that up front, like I'm not going to come to you one time. There's going to be another round of requests, and hopefully that's it. So just having a full walkthrough of the loan process, I think, and understanding that there's an initial approval and a final approval, so that they understand, it's going to be submitted more than once, and they're going to look at your file for different things, so that they understand kind of how that goes and when potentially will I ask for things. I think that that sets us aside right now, because we do that.
Right, right. And I tell everybody that, like, that's super important. I don't want to sound like arrogant or anything, but our clients, they go through the process and they come in and their guards are up, and they've heard from friends and relatives and the media and such how difficult this process will be for them. And then by the time we close, they're just like, wow, I didn't expect this. And this is not how we thought it was going to happen. And so I know for us, we're not the only ones that operate this way, but for us, we're relentless about getting as much information as we possibly can up front, right?
Mhm.
To avoid any potential pitfalls. But we also communicate throughout the entire process to let people know, hey, this is what stage we're in. This is what's happened. This is what will happen. And this is what we expect to happen in the future. And I know if you have someone like Carin on your team, she doesn't like to go back and forth that much. Like she likes to get it all. And, if she's got more than, 2 or 3 touches in underwriting, she's not very, very happy about that. And I'm just like, settle down, Carin. It's okay, but you don't understand. I've sent that information already, and and I'm just like, in the back of my mind, like I'm like, yes, glad she's on my team. But no, we appreciate that, Carin. So, also, we just got someone. You remember her, Marie?
Hey, Marie.
And she purchased a home while abroad, and it was a great experience. And thank you, Marie, for the shout out. I just pinned that up there. So let's get to it, Carin. So one of the things that I wanted to talk about today, so for those of you that are listening that have either gone through the home buying process or are currently going through the home buying process or refinancing and whatnot, I'm here to tell you today, don't be afraid of the process. It's not that daunting. It feels that way because it is intrusive, and we ask some personal information, and we ask you to dig up some things that may be difficult to find at some point. But if you have like the minimum documentation that we need, a lot of the stuff these days we're able to access it without asking you to get it to us, or if you get it to us and we can kind of take it and run with it. So I just ask you, don't be afraid of the process, because there are going to be people like us that have a team that can take you through this entire process, and you'll be pleasantly surprised with how it goes. And at the end of the day, we're talking about sustainability in regards to home ownership. And I think one of the biggest keys of that whole sustainability is the education piece. So we were talking earlier about, hey, Carin, what are the top 3 things that you see? You want to get into that, Carin? Like I actually wanted to go and do a rant yesterday on like Instagram or something like that on another channel about these large deposits and bank transfers. Let's talk about that.
So, going into home ownership and refinancing, it's really important that you have a clean blank bank statement. And what I mean by it is, if you're going to transfer funds between accounts, some of us have 10 accounts, some of us have 1, some of us have 5. But if you're going to intermingle your funds from your accounts, just know that it has to be a clear paper trail. The bank is going to, they want to know where is this money coming from? Where did you take it from? Where is it going to? So if you don't want to give us all 10 of your accounts, then don't transfer between accounts, at least for 60 days, because that's what we're going to need to see is 60 days worth of bank statements, which is on average 2 months. So, if I'm asking for a bank statement and you've got $10,000 coming from this bank over here and 10,000 from my savings, and then I took 3 and I pulled it over here in my money market, but then I'm gonna pull some money from my retirement, I'm gonna need all those statements. So my best advice is any larger deposits that are not direct deposits, because we work jobs, we're going to get direct deposits, or we're going to have deposits for like refunds from the IRS. Those are clearly traceable. They know where the money's coming from. But if it's a transfer between accounts, just know that you're going to have to provide every statement to show where those are coming from. I'm not talking about $500 here or there. If it's $500 in 5 transactions on the same day, I'm going to need that because it adds up to be a large amount. But if it's, $3,000, I always say roughly $2,500, anything $2,500 and above, we're going to have to source it and we'll need all those statements. So for 60 days, just don't do it. That's the simplest thing to say. I also had one where there would be like a credit card. Your credit card sometimes will send you a check and they'll say, well, you can use this check and you can deposit money right into your account and it'll be 0%. That's another thing you probably don't want to do in the middle of a loan because that's going to impact your debt to income ratio because it increases your minimum balance on your credit card. And then we're going to have to provide that statement to show the money came out of there and kind of work those things. Now, if you have a low debt to income ratio, then it probably isn't that big of a deal, but that's just something that probably you want to hold back on. But yeah, so wires, don't take that $2,000 you've been hanging out in coins in your closet and just decide to deposit it because we cannot source that. So you want to hang tight on those things. That's probably the biggest one of our hiccups is the transfers and the large deposits that can tend to go in.
Yeah. No, thank you for that, Carin. That's really important. Just a quick story around that. I had some clients last year, and they are located in the U.S., but one of them, their parents live in Europe. Oh my, there was money just going everywhere, and he's like, you know what? Why are you asking me for all this? I gave you my bank accounts. You see, I have money. And I'm like, yeah, we understand, but we have these transfers that are coming in and out of here. And we have to source where this money's coming from. And so for him, then we had to go and we had to get the foreign bank account. We had to get it translated, right? And we had to get it translated. And it was a really big deal. Although we got it done, we could have, if they would have sort of listened from the start and not done these transfers that we talked about, it would have been a much smoother process. So for us, it's fine. That's a part of our work. Like we'll do the work and we'll do the legwork, and there's no issue with that. However, to alleviate some stress throughout the process and to avoid any frustration too as well, because folks get frustrated, just try to make it as clean as possible. So for 60 days, just cut out the transfers back and forth. Is that right, Carin? Just don't do it.
Absolutely.
Yeah, just don't do it. And so also I put up on the screen the do's. Hopefully everybody saw that. And then we like to focus on the don'ts. So number one was the unnecessary bank transfers and changing banks and such. The next slide I'll get into, Carin. Let's talk about credit.
Okay, so you have a credit score, right? And there's a couple of different ones. There's one that if you're going to apply for an auto loan that they use. There's one that your mortgage company uses. So there's a couple of different ways they look at it, right? So you need a certain score to get different rates. So the important thing to know about that is you don't want to do anything that's going to negatively impact that score, which would make it then decrease. Because a lot of times the lenders are going to do a recheck of your credit at the end. When they're doing that, they're not only looking at your score, but they're going to also look, have they gotten any new debt? Because that impacts your ability to pay for the loan that they're underwriting, which falls out in your debt to income ratio. So what they're looking at is how much money does this person make in relation to their debts? And that's how they come up with the debt to income ratio. Your loan officer sits down and they look at all your liabilities that you have, which are on your credit report in general. And then they look at how much money you can qualify for. Typically, they want to have no more than like, what is it, 30% or something.
Oh, debt to income ratio.
I'm talking about like on your like rule of thumb with credit. You
Oh,
like
I'm gonna put it. I'll put it up on the screen and we can talk through it. And then one of the
mm,
things too I want to point out too as well. So they some lenders do refreshes. So they don't necessarily pull your credit all over again where they're looking to pull it all over. What they do is sometimes they'll do a refresh to see if any of your balances have increased. So you
mhm,
might have started off with $1,000 credit card balance. They want to make sure that you didn't use 10,000 or 20,000 of your available credit limit during that process. And so it's not often, but sometimes they will do it. And it's generally based on an audit, and it's a small percentage of those that happen. So um, I wouldn't tell you that it's going to happen all the time. You can take your chances, but I'd go into this being very conservative with the thought behind that someone really could go back and pull your credit. And you don't want to do anything that could jeopardize that through the process. Let me put this up on the screen. So this actually
mhm.
breaks down your credit score. So like Carin was mentioning, so 35% of your credit score is the actual payment history. So make sure you pay on time. Um, Another 30% of that pie, as we slice it up, are amounts owed. And this is actually what you were talking about. Yes,
Yeah,
Carin, 30%. So you want to
yeah,
keep your balances 30% or less of your credit limit. I usually tell people 50% because it's really easy math. So just 30% though is a number. So if you have $1,000 available credit limit, just keep $300 on there. If you have a 10,000, 3,000 is where you should be. But then once you start going above that 30%, that's where we start to see your credit scores drop a little teeny bit, not much at all. The length of history. One of the things I like to point out to people that are listening to this, just don't cancel your cards. Like I've seen people that have had cards and revolving debt for 10, 20 years, and they just close the account out. They pay the credit card down to zero, or they get frustrated with the vendor and such, and they just close it all out. But what happens is it takes away your history, the length of time that you've had credit. New credit. If I hear one more person, Carin, tell me that we can't pull their credit because it's going to mess up their score, I'm gonna go crazy. It's so that's um all a part of this. So like if you think about it, you look at 10% of the pie, a very small part of that is like our credit inquiries. It's like you can get your credit pulled. Like arguably, this is probably the most expensive, the largest expense that many people have had outside of like a student loan or car payment or buying a car is purchasing a home. So it's widely known that if you are shopping for an interest rate or looking for a mortgage, lenders will have to pull your credit. And so if you do that within a certain window of time, I've seen it range from 15 to 30 days, from 30 to 45 days, depending upon the repository, Experian, Equifax, or TransUnion. Those inquiries count as one. So you go to 3 mortgage companies today, it only counts as one credit hit. So don't let anyone tell you that you can't get your credit pulled. Sometimes lenders have said that as more or less like a scare tactic. So you're like, oh, I'm not going to get my credit pulled because of that. But just keep that in mind. And then lastly, the types of credit that you use is another 10%. But I think I stole your thunder on that one, Carin. Let's see if have we experienced anybody that has added any new debt to their credit, like gone out and bought a car or anything like that? Thank you for not
yeah.
telling me that too, if we have, because I haven't experienced that yet.
Yes, it wasn't the typical thing. It was solar panels. Remember they did a credit refresh, and we found out that our clients had gone and gotten solar panels, which was a new debt that they
Hell, it's
had.
on their bank statement too, I think. Uh, oh, it was a credit refresh?
Mhm.
Oh, thanks
It
for
was a
not
credit
telling.
refresh because the loan was actually closed. We had already closed, they had already signed, and they did a credit refresh and came back and they were like, "Do you know this borrower got solar panels?" And we were like, "Huh? What are you talking about?" So I had to go back to the borrower and say, "Hey, did you do this?" And they're like, "Oh yeah, it was in process. I forgot to tell you guys." it's not on the credit report because it just happened. And we're like, what? So it ended up working out. We were able to work it out for them. But we did have to address it. So they, they will look at the credit refresh and just make sure that you can still afford it. Luckily, in this case, it worked out. But like I said, don't go out and get new things that can impact your debt to income ratio, because it can impact you qualifying for the loan. They underwrite based on a certain guideline. And if you then go and change that, they have to go through underwriting again to make sure you still qualify for that loan.
Yep. No, you're absolutely right. So number one was bank transfers and large deposits. Just be cognizant of that. Number two, you can use your credit cards. So it's not a scare tactic. It's fine. Like, use it for toiletries, for groceries, gasoline, things like that. Just however you would normally use it. It's fine. You want to buy a TV with your credit card and you would have done it anyway. It's fine, but just be aware that those big ticket items you want to stay away from doing. It's not the fact that anybody's gonna find out that you've done it, but the problem is when they do, if you happen to be one of those clients that goes through that audit piece and they pull your credit, then we're scrambling. And so that leads us into the last thing that Carin had talked about is debt to income ratio. Or I like to talk to people about, Carin, when we get into it, and we always talk about this as a team, affordability is greater than the qualification piece. Like, that's the most important thing. Like, folks come to us and they want to know, like, hey, Shawn, hey, team, how much do I qualify for? Now, I can certainly tell you, Carin, how much you qualify for based on your income and your debts and such. But what we always like to ask is, like, what do you feel like you can afford? Like, what is that comfortable payment for you? Right. Number one. Number two, also think about your max payment, where it's like, Carin, I won't go a penny more than this number, because those two payments equal a price range, right, that you can actually shop in. And so that affordability piece is very important. However, though, on on paper, the debt to income ratios typically go up to about 50%. On this particular slide, it says 36%. That's very conservative, but we use your gross income. So I'll take this slide off the screen and I'll explain it to you real quick. So just for easy math, if you are someone that makes, I don't know, call it $60,000, $60K annually, and we'll use your gross income before taxes. So that's $5,000 a month that we were able to use for your total income. All right. So you'll take your total gross monthly income, you'll multiply it by, call it 50%. Right. That number, that number will equal $2,500. So in this particular case, that is your total allowed debt. Right. That's a total amount that you can carry in all debt. That would include your housing. That would include any car payments, installment debts like student loans and such. That would include the minimum payments on your credit card. So if you were this particular person and you had, I don't know, call it a $500 a month car payment, $100 in credit cards monthly, maybe $250 or so in student loans. Now let's call it 150 because I'm not that smart. So I want to make sure I get this math right. So that's $750 in total debt that you have monthly. You'll subtract that from that $2,500 a month number. And so you're eligible to buy a home for $1,750 a month, right? That's what you would qualify for. That would be the debt that's allowable for you to qualify for a mortgage. And that's simply how you calculate your debt to income ratio. And so as you're going through this process, it's our job and our responsibility to kind of help you understand what that looks like. But just keep that in mind if you're looking and you're shopping for a home, or you're looking at refinancing and you just switch jobs, or you started a business or something like that and you want to kind of back into it yourself. That's how you do it. And don't beat us up if something pops up and a debt that you might have is much more than what we thought it was, and then your debt to income ratio is popping up. And so that's where those questions will come up at the end or towards the end, or for us, we try to get it up front, but throughout the process where we're like asking questions about your income and such. So, Carin, I'm not sure if you have anything you want to add to that, but that's very important too as well for us.
No, you covered it.
Cool. So, anything you want to add? I kind of, some cases stole your glory, I think, on this, but anything?
No, you talked about just making sure you pay on time. That's really important, because I know some lenders have either a 12-month or a 24-month payment history that they're looking for, and it needs to be satisfactory. So you're not going to want to have those 30, 60, 90 little check marks on your credit report, especially for a mortgage account. So just being aware that you're paying on time is important.
I have a question for you. What do you, so far, what's been the most annoying thing that clients like just get annoyed with you about? Or that you sense that they're annoyed?
I really haven't. Luckily, I really haven't had clients get very annoyed with me.
Mm-hmm.
I would say if I hear a comment, it would be something regarding like me having to ask for another bank statement. Like, and it would be more like, oh, this is kind of intrusive, isn't it? Or, but they'll say, I get it though. I get it though. You've explained it to me. I feel like if I didn't explain the whys behind the things that we asked for, there would be a definite potential there for there to be an annoyance. But not to toot our horn or anything, but I don't feel like they've been really annoyed by that. It's just more of like, oh, I hadn't realized that this was going to happen. I feel like it's more of an aha moment for the client, where they're realizing like, oh, maybe I shouldn't have done that while I'm in the process of getting a loan. Like they're kind of like, oh, I shouldn't have transferred that, or oh, I wasn't really thinking about that, because it requires more documentation, So
I got two more questions for you. What was your sort of biggest challenge, like transitioning into learning this part of the business? Because you were, let's be honest, like you didn't have any mortgage experience, right? You purchased homes and you owned a insurance agency and you've been an entrepreneur and a business owner, but you haven't had any experience working in the mortgage industry. What was the most challenging piece for you?
Initially, it was just learning what the forms were, and filling them out. A lot of it to me is pretty straightforward as long as you are looking at the details, and reading the guidelines. So if you understand what the lender is looking for, and you're reading the guidelines, to me, it's pretty straightforward. It was just more so learning what the documents are and how to fill them out.
Got it. So guidelines are very important, and knowing the paperwork too as well. And so also for us, find a lender. So us, we'd be great and grateful to do your loan, but someone that's going to actually also speak past the acronyms, because I know that's challenging too as well.
Oh, that definitely was. I forgot about that.
The acronyms.
I remember. I forgot about that. Yeah. Wow. When I first started, we have like a chat, right? And everybody's like, yeah, and get the ROV and I'm like, what? And the LP and the DU. I was like, hey guys, can we speak in non-mortgage lingo? Because I don't know what you're talking about. So leave the acronym because I want to see it, so I don't look like a blundering idiot when I'm out in the field. But can you put what you're saying in layman's terms beside it for me? So I learned the acronyms, guys, but I still use long form for the most part because I just feel like let's all just be on the same page. How about that?
Yeah.
So
yeah. I
forgot about that. Yeah, that definitely.
You'd always hit me on the side and say, hey Shawn, what is this one? Or in the team chat, it'd be like, I don't know what this one is. Guys, can you put this in long form for me? Or you would try to translate.
And like, does this mean this?
Yeah.
Actually, you know what's funny is I just got a new one today that I'd never seen.
Which one?
And it was in NOV.
NOV?
Yeah.
Yeah, that's a VA one.
I was like, oh,
evaluation.
It was actually in a conditional, in a lender portal, and it was
Oh,
like,
really?
this will be cleared because I was like, this doesn't apply. Like, why are you asking for this?
That's for
I'm
the
not going
lender
to
to
ask my
take care
borrower
of.
for this, right?
Yeah,
And it
yeah.
was like, oh, it'll be cleared once we review the NOV, and I'm like, once you review the what? And I started laughing. I was like, here we go again. Let me look up this one. But it was something to do with the appraisal. So it
Yeah.
worked out.
Notice evaluate. That's something that the underwriter has to do for a VA appraisal. There's a document. And yeah, that's what they have to do. So, last question on this one. When you get a clear to close, how does that make you feel? And what is
It
it?
makes me
Number
feel
one,
like, let me hurry up because you're going to push the button before me. And I like to push the button because that's like my confetti. I hit the button and then I know the email is going to go out to the borrower and then they're going to be excited. And I kind of have thrown in another piece of that. If they've been texting me, I like to text before the email goes out so it can really be from me. So it's like my own little party. It's great. A couple of borrowers we've gotten on and had like cheers and dancing over the phone. It's been great. It's fun.
yeah,
It's a celebration.
that's a great milestone to hit. Like when you get that message that you get final approval, no more questions, nothing else that needs to be asked for. And it's funny though, because Carin will beat me to it. Like she knows if I see it and too much time goes by, I'm going into the system and I'm going to put the date in there so that email will go out. But she beats me to it. That's funny. So it's a celebration, Carin.
Yeah, it's a party. Like if like I said, if I have their text, like if we've been texting, I'm doing all kinds of emojis and funny stuff on the phone, and they're like, yeah. And then they start sending me gifts. Like it's great. It's great. It's a
uh,
whole party.
so for the compliance and regulators out there, gifts GIF. That's
Oh,
the
that's right.
not gifts with a T on it.
That's
um,
right.
cool. So I've taken a bunch of your time. I know your kids that actually what time is it? It's about 2:44. School's almost over.
Yeah, but this is quiet time.
Yeah, I
That's
know.
why we can do it.
Yeah, I know. So you know what? Do you want to answer the purpose question, Carin? Because you got to answer the purpose question. All right, so we did the lending piece. Now we're gonna do the purpose part. So Carin, dead or alive, you get one person, one question. Breakfast, lunch, coffee, dinner, a quick email. Who would it be, and what would you ask?
Shawn,
Don't do that one to you.
what did Kendall Ficklin tell you about me? Let's just talk about this.
Oh, you need to.
I'm a what?
You're a chameleon. You need to
A
plan.
chameleon's what?
Yeah, I caught you off guard.
I have to think. I don't answer stuff like that off because I might say it and then it's not what I want to say.
All right, so don't worry about it because you're different than our other guests. You're in house, so we won't do you like that. What I'll do, ladies and gentlemen, is when Carin thinks about who that one person would be and what question she would ask, we're gonna put that in the as a post. Fortis Mortgage is actually going to post that. Actually, and that's going to be good because you just got some professional pictures taken and stuff. And so when we get you striking your pose, Carin, we're gonna put a caption. We're gonna put a caption underneath it, and we will post that. Is that a
I love
deal?
it. That's awesome, Shawn. Yeah.
No, this
Yeah.
this is great because it's to me, like I said, it's very important that we have the very best people that work for us, right? And we want to also humanize the mortgage experience. And what better way to do it today than to just hear it from me? Because obviously, I'm going to tell you that we're great. I'll tell my team though how we need to be to get greater. But you've heard it here, and you can see kind of what we go through in our process, and don't be afraid of it. Like it's a mortgage. It's that's why we're here, is to lead you through this process and to guide you through it. And to make sure that you always understand what you're getting yourselves into. And just like I said, Carin's gonna sprint and get us to the finish line, and we're gonna come out victorious. So Carin, thank you for your time today. I really appreciate it. This was very helpful, and I hope it was impactful for people. So when you come to us at Fortis Mortgage, just understand that we have a team of people like Carin, and they're going to be behind us to make sure that you have a great experience, because you don't need to be worried about like this process, because you got to work and plan for a move and take care of your kids or whatever it is outside of this mortgage piece. Let us take on that stress and, do that work for you. Do you have any parting words, Carin, before I let you go?
No, I think that was exactly how I would have ended it. Let us take it on. Don't stress about it. That's our job. Just get us what we need so that we can take it on for you. Let us tackle that beast and get you your new home or your investment property or whatever it is that you're trying to do. Let us do that for you.
Nice, nice. So everybody just continue to remain as safe and as healthy as you possibly can. If there is anything that we can do to help anyone in any way, we're happy to do so. As I always mention, Carin, it'd be a shame for us to have all these relationships and resources and not be able to, excuse me, to help as many people as we possibly can. So we're here for you. And next week, we have a new guest that'll be on next week. And, everybody have a great day, and we will see you then. Thank you, Carin.
Thank you.